So we absolutely have to go ahead and touch on Tesla stock as it's been getting pretty ugly out there, kind of congruent to the weather that we're seeing out there. Of course, we're in the midst of hurricane season for the states within the southeastern side of the country, but nonetheless, it's been getting pretty ugly for Tesla stock and the broader markets. And you could kind of say we're not only in the middle of hurricane season for the states, but just for the broader markets. We know that historically speaking, we tend to see weaker price action from August to October. And of course, historical price action is not indicative of future performance. We know that, but it's something that you want to be mindful of, especially if you're forecasting, right? There's a difference between predicting the market and just forecasting what's going on. And so one of the things that you have to understand is that, yeah, we're kind of in a weaker season for the market. And as we just interestingly enough broke into October, we saw the markets go into correctional territory. The broader indices are pretty much significantly down. And of course, there's a lot of variables contributing to that. That's why we're seeing the VIX kind of spike up. We're seeing just a lot of interesting things take place in the market, which, by the way, we actually provided a weekly update in our free weekly market post insights for those that are signed up. It's essentially a free newsletter where every single week I send out what's going on. And so we talked about a little bit of the sector rotation and what's taking place, but I want to go ahead and touch on Tesla, right? Because fundamentally speaking, we had some pretty good news with Tesla, right? So in July, they actually had more shipments of their vehicles. So things fundamentally are looking well, but we have to understand that fundamentals, although that's something that you always want to be mindful of, it doesn't immediately reflect into price action. On the longer time frame, it does, but in this short-term miss of volatility, especially as we're heading into an election year, of course, there's going to be a lot of chaos. And so I want to go ahead and touch on Tesla stock from a technical perspective and also a fundamental perspective. But in order to do so, we kind of have to exit out from this beautiful yet ugly scenery from over here. So I'll catch you guys in one moment. Alrighty, so we are officially in my laptop taking a look at Tesla stock. And although I shared a bit of positive news from a fundamental perspective with Tesla, I kind of want to provide a bit of a warning that this video is not all roses for Tesla, and there's actually a bit of weakness that I see likely to take place. Now, of course, I'm going to go ahead and just share my perspective. You should only trade and invest in whatever you see value in, but there's a couple of things I want to go ahead and touch on. Now, I do have Tesla in my long-term portfolio. I still have exposure to it. I'm not selling any shares of Tesla in my long-term portfolio, but I'm certainly not buying right now either. I'm going to go ahead and wait for a more suitable moment to go ahead and add more shares into my long-term portfolio, and I'll go ahead and touch on where that exactly is. And in regards to my trading account, right, because trading and investing are two separate vehicles, I haven't really been trading Tesla. I actually haven't been doing any much trading in the trading account, as I've been kind of waiting out a bit of the storm right over here. And we'll go ahead and touch on what has taken place, right? Because of course, Tesla has fallen down, but it's not just Tesla stock and silo. We're seeing actually the broader markets like the S&P 500, pretty much sell off. And if we take a look at the NASDAQ index ETF, and let me go ahead and remove this drawing, you see that the selling is more prominent. And as I shared earlier, it's actually in correctional territory. It's down more than 10%. So we have this pullback, this correctional pullback, but ultimately, I believe that we're going to have a bit of a bounce in the broader markets, but I want to go ahead and touch on a couple of things, right? Because as I often like to share within the Push and Profit private group, I like to look at market breadth, and we'll go ahead and kind of explain everything. So make sure to watch this video in its entirety. But right now, if we look at different sectors within the market, we'll see that there's actually some certain pockets that are doing better. For example, if we took a look at the consumer discretionary, well, that's falling down badly. We look at tech, that's falling down. We look at energy, selling off. We look at the financials that recently dropped. But then when we look at the health sector, it's actually holding up. It's actually recently pushed up. It's kind of consolidating, but it's holding up. And then if you look at pretty much the consumer staples, that's actually pushing upwards. And so we're kind of seeing more of this outflow from the heavy mega cap tech names going into like the boring dividend stocks, right? Think of like Hershey, etc. Let's actually look at Hershey, by the way, because I do have exposure to Hershey. Hershey, look, it's having a bit of a push up, right? So again, as I'm saying, we're having kind of this movement kind of being diversified, right? And one of the things we have to understand is that although, yes, the S&P 500 is a broadly diversified index ETF or fund, has over 500 companies, it is skewed more towards the larger mega cap names in the weighting. And so if the mega cap names like Tesla, Nvidia, if they're selling off, well, that's going to push down the S&P 500. So that's something I kind of want to make sure everyone understands, right? It has a huge weighting in the big tech stocks, and so if they're falling down, it's going to drag the diversified index downwards. But what we're seeing is a lot of those boring companies, the rest of the companies in the S&P 500, right? Not the tech companies, but the boring, dividend companies, right? They're actually holding up pretty well at this current time. Now, actually, when we're looking at the S&P 500, one thing that I do notice right off the bat is that we do have this wick over here. So it shows that the buyers are stepping in. And this, in the past, around over here, 529 on the SPY, was a bit of a resistance. And we know from a technical perspective that old resistance can essentially become new support. So hopefully this is a bounce for the market, for the broader index. But of course, we don't have the definitive answer. Right now, at the time of this recording, the future markets have opened and they're actually pushing downwards. Of course, that could change later, but it's not as bad as the Japanese markets. The Japanese markets are getting clobbered. So if you are investing with any of those Japanese companies, all power to you, because I mean they're getting decimated. But nonetheless, let's go ahead and go back to Tesla, right? So here's one of the concerns I have with Tesla. So Tesla, from a technical perspective, is at this area with little volume relative to price, and we see selling pressure. And what we know is that when there's selling pressure in an area with little volume relative to price, that amplifies the move. Similarly, when you have buying pressure, that amplifies the move upwards as there's little volume, so buying pressure pushes up the order book. So that's why we saw Tesla stock pretty much rally up, nearly 40% in the span of just a couple of weeks. And so, the hedge funds that were shorting, they got burned, and the ones that were still holding Tesla, well, now they're rubbing their hands together with a big smile because, Tesla's falling down, and ultimately we could essentially see Tesla get back down to this 170 area where we see more concentration in volume relative to price, and that's where we may see the floor, a little bit of a floor for Tesla. And the reason I say this is because as we're seeing the mega cap, the Magnificent Seven sell off, we're likely to see Tesla sell off a bit further. And that's because Tesla has been kind of lagging the Magnificent Seven. Some have called it the Magnificent Six because it's all the other companies aside from Tesla, the other constituents in the Magnificent Seven doing well, while Tesla it kind of only did well for like maybe 2 weeks out of the year, and then ultimately went back to being red for the year. Versus if you take a look at Nvidia, right? Nvidia having a pullback isn't such a bad thing when, it ran up heavily. This was one of the trade ideas we called out in the Push and Profit private group, but at its peak, it was up nearly 171+%. So, yeah, a little bit of a pullback, but it's not as bad. Tesla, on the other hand, is actually red for the year. And so ultimately, I'm not buying shares of Tesla in my long-term portfolio just yet. Again, you do whatever you see value in. Just want to kind of put that out there. But I'm looking to see if Tesla continues selling off and gets close to that 170 area, and then ultimately see if we bounce from this area. As there's more volume, we may start to finally have a floor and consolidate a bit. The buyers start to look at this as a psychological area where they want to go ahead and buy. But right now, I'm just not interested, especially as we're falling off of this descending trend line. Mind you, this has been a trend line that I've highlighted in the past that Tesla has rejected for the last, let's see, this was back in 2021. So this is nearly 3 years. Tesla has tested this trend line. For a brief period, it broke above it, but ultimately it didn't have a candle close above it. Right, we have a wick above it, but a candle did not close above it on a weekly time frame, so it doesn't give us much confirmation. And it shows us that it's still getting rejected from a technical perspective. And of course, I like to mix things up, looking at companies from a technical perspective, a macro perspective, and a fundamental perspective. I don't just look at one data point in silo. That's one of the things I often highlight on this channel. And I want to go ahead and talk about a couple things from a macro perspective. Now, before we do so, I actually want to highlight this chart from Bloomberg. Kind of just mentioning some of the things we already said in this video. For example, it shows how, the Magnificent Seven is having a large sell-off, right? Selling off. The S&P 500 that's weighted, that has more of a weighting with the, those mega cap tech stocks, it's selling off, but it's not as bad as just holding those mega cap tech stocks. And then when you look at the equal weighted S&P 500, so it's the same thing, the S&P 500, but equally weighted, is having like a softer pullback, and that's because we're seeing more of this diversification within the markets, which I think is likely to continue. But I still believe that we may end up getting a bit of a bounce with the broader markets. But let's go ahead and focus on Tesla. So one of the things we have to understand is that this hasn't been a very favorable macro cycle for Tesla, right? Interest rates have been high. Even people with a good credit score, for example, I just checked yesterday, I'm at like 830 for my credit score. Even people with an 800 plus, financing a new vehicle, you're looking at 8% or higher, which for those of you that don't know, when I purchased my vehicle years ago, right, I financed it. Of course, I didn't buy it cash. Most people don't buy cars cash. I financed it, and the interest rate was 3%. We're at a time where it's nearly 3 times as much, even with outstanding credit. And mind you, my credit score was not as good as it is now. It was a bit worse, or it was not worse. I don't want to say worse because it's actually, 830 is okay. But nonetheless, it wasn't where it was now, right? So it's very unfavorable to finance a car. But one thing that we do know is that the future markets are pricing in that the Federal Reserve is either going to cut by by 25 basis points. There's a 30.5% chance that they're going to cut by 25 basis points. And they're actually pricing in is nearly 70% chance that they're going to cut by 50 basis points. And so we know that rate cuts are coming. But one of the things we have to understand is that although rate cuts coming may seem like it's good for Tesla, it takes a while for the impacts of monetary policy to really bleed into the economy. And so just because you cut rates, it doesn't mean, okay, things automatically change right away. It takes some time for that to be felt. And so, and mind you, rates are still going to be high at this, area over here, right? So it's still not a favorable cycle for Tesla, and it's not going to be a favorable cycle, at least for a bit of time. It could be until 2026, where we start to see things kind of look a little bit more optimistic for Tesla in terms of their car or their auto segment, right? But I also want to go ahead and touch on what we're seeing from a macro perspective later on in this week. For example, what we have is the ISM services, and then also the S&P final U.S. service PMI, and then of course initial jobless claims, and then we have one of the FOMC members speaking, and so we're likely to see again, it's a light week in terms of macro info or data, but we're likely to see the market kind of scrutinize the data that comes out as there's been a lot of uncertainty, as I mentioned previously, and this is going to give us kind of an insight of what we're seeing from a service perspective. For example, the ISM service report, that kind of provides a detailed view of the current state of the service sector, kind of highlighting a specific area of growth or decline. And this kind of the S&P final U.S. services PMI is kind of similar, but it offers more of a broader snapshot of the service industry and performance and future expectations. And then you tie that in with initial jobless claims. We want to get an updated view of the labor market because it is possible that the Feds were a little too late to the party, as they habitually are in terms of cutting. And we may, see the market participants panic that we could end up in a recession. And so that's something that we want to also be mindful of. Now, that's just kind of my view on Tesla currently. Again, you guys do whatever you see value in. But before you guys go, make sure to check out the links in the description below, because one of the links is going to be a link for not only the free weekly market pulse insights, but also if you're interested in joining the Push and Profit private group. And also before you guys go, make sure to check out this next video right over here, and I'll see you guys on that next video. Take care, guys.